Good evening and welcome to First Day Chats by Dr. G. I'm Dr. Adana Grandison, a physician in Barbados and your hostess for this evening. First Aid Chats by Dr. G is a live podcast that provides listeners with a unique opportunity to not only hear complicated medical conditions explained, but also clarify any misunderstandings you may have about that condition. After all, a medically aware and educated patient is an empowered patient. And this evening, our episode is entitled Protection That Counts. And our guest is Mr. Robin Taylor. Mr. Taylor entered the life insurance industry in 1992 at 19 years of age, and after his second year qualified for the industry's highest award in becoming a member. Getting a lot of feedback. In becoming a member of the prestigious $1 Million Roundtable. Membership is earned through consistent high performance and by maintaining impeccable ethical standards. An AMTC graduate, he was promoted to agency manager in 2001 and has since built a dynamic team of financial advisors that in 2007, 2008, and 2009 wrote the most new premium income. In 2007, he was voted the Agency Manager of the Year by the Barbados Association of Insurance and Financial Advisors. In 2007 and again in 2008, he was elected to serve as the local chairman of the communications committee, of the $1 Million Roundtable. He was then elected to be zone chairman with responsibility for the Caribbean region for the period of 2009 to 2010. He thinks that assisting the clients of his advisors to plan their financial futures in the event that they live too long, die too soon, or become disabled along the way is an honor he highly regards. His personal philosophy is to be trusted is a greater quality than to be loved. He is also the husband to Kim, and they have 4 daughters and 2 granddaughters. Good evening and welcome, Robin.
Hi, good evening, Dr. G. Are you hearing me well?
Yes, I am. Getting a bit of feedback on your end, but I think that's probably better because I was hearing a lot more feedback before.
Okay.
So I wanted to start off this evening by asking, what really is insurance and why is insurance important?
Oh, okay. All right. So, insurance simply is a mechanism used for the simple purpose of transferring risk from yourself onto an entity that is able to handle that risk because that risk may be too difficult for you to handle from an economic perspective.
Right. And certainly that puts it quite nicely essentially in a nutshell to really explain why. I mean, I don't even think we need to have any more of the conversation because you put it so beautifully in terms of why it's so important really to have insurance. But specifically, given that the podcast focuses on health, I want to take this opportunity this evening to have a look at health insurance. Can you tell us a bit about health insurance and the importance of health insurance? Are there different types of health insurance plans that a person can look into or should look into, and why?
Okay, so thank you for having me first. I really appreciate the opportunity to share with you and your listeners on this subject. And so, we're in for a really good session. So, thank you, right? But as it relates to health insurance is absolutely necessary for every single individual who can afford to pay for to have. And again, if we can refer back to I would say my meaning of insurance, it is for you to have an instrument that transfers your financial risk that you are unable to handle personally onto an entity, which is the insurance company, to handle. And so, because life has so many ifs from a health perspective, uh, it, 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 it lends to the thought that if there are so many ifs relating to my health, I can tear my Achilles tendon, which happened with me in 2019 December, and to to be able to pay for that surgery to have the best care, it would mean that that is going to call for, in some instances, a substantial amount of money for that surgery. And if my savings habits aren't such that it allows me to have the disposable income to do that, it would mean that the care that I should have, I will not be able to have. And as a result, I could possibly walk for the remainder of my life with a limp. And that's not what you want.
Right.
Now that's for me as an individual, but what happens to the children then? And so you have this child, and so they are not covered, and so they have this particular illness that can affect them and their lifestyle, their quality of life. And because it may be out of your reach financially, because your savings habits have not been such that you can afford it out of your savings, then that child does not get that care that you would love for them to have. And so then it becomes very challenging for them, even from a psychological perspective. They feel as if they're different because they have a condition that they're unable to handle. And so insurance just comes in to fill the gap where an individual is unable to handle economically for themselves. And then the insurance company who can handle it handles that cost for them.
Okay. So I wanted to take a closer look in terms of what are the different. There's so many terms that we see being tossed around in the health insurance and insurance space. Period. Things like
Right.
premiums, deductibles. Walk us through. First of all, if there are different types of health insurance, tell us about those different types of health insurance, and then really break down what are some of those terms that some persons often get confused with.
Okay, so Dr. G, let's just say that from time to time, an insurance company for marketing purposes may may call its health insurance product by a name that sounds different to to what it used to be called before.
Right.
But a health insurance program at any insurance company generally is a health insurance program and covers basically the same needs, offers the same coverages, sorry, that most insurance companies will. And so if you're talking health insurance is the same program at one insurance company that it is at another one. The difference will come in when you get in then to the specific of the coverage.
Right.
And so the premiums are different. That's what's different from one company to the next, because the company looks at its business plan, and they say, well, this is what we can take to the market as a premium for the type of coverage we're willing to offer. So you may have some differences as it relates to premiums. And so the premium contribution speaks to what you are going to pay per month or per year or per quarter, whatever the modal contribution type is, for the coverage that you want. So the premium is what you pay, whether it is $200 a month or $600 per quarter, and you get in return the benefits of the medical insurance. You mentioned a term, deductible. And I must say it is true that most lay people have a challenge with the deductible, even if it is explained. And because we while we offer this insurance, is not something that we're looking for the challenge to happen with you.
Right.
And so when it comes time to claim, and you walk into the insurance company suggests to you that in order for you to claim, you have to pay us some monies first. Then I can understand how challenging that can become to hear. And so a deductible is the amount you pay for the covered healthcare services before the insurance company plans to start to pay. This is something that you may even realize in a vehicular accident as well. If your car is in an accident, when you go to the insurance company to make your claim, the insurance company will say to you, "Hey, Dr. G, you have to pay us $1,500 first before we can start to make the claim." So usually it's kind of like a co-payment situation to cover the services. So your insurance company pays the balance. I don't know if that helps with the deductible.
Right. So the deductible essentially is that amount that you have to pay up front before your insurance company starts to cover you,
That's
whereas
right.
your co-payment will pay essentially like a percentage on a schedule basis. So you put some and they put the other part.
That's correct.
Okay, great. Excellent. Walk us through getting insurance. What does it really take? Why is it that persons have to be subjected to a barrage of tests?
Mhm.
Why? Why do we do all of this? Or why
Okay.
do you do all of this rather?
Right. So let's put that squarely on us then, right? Because we have to do that, right? We can't actually get away from that. And so an insurance company has what we call bands of insurance. And the insurance company says a person between the ages of X and X, so let's just use for this purpose, which this may not be accurate, right? A person who is between the ages of 1 to 30 years old who applies for insurance will not have to do any medicals at all up to, let's just say, $500,000 in insurance.
Right.
The insurance company then says if that same range of person between 1 to 30 wants to purchase $501,000, they then have to do a medical to make sure that the insurance company is willing to take the risk for the premium for the coverage. Or
Okay. Hmm.
it could be that between 30 to 35, oh, sorry, 30 to 40, and the insurance is $500,000, it may be that the medical may be required at that time.
Right. So essentially you're trying to risk stratify persons.
That's right. That's right. We're trying to see what is beneath the risk, what is within the risk, to see if we are going to offer a standard premium, which was the premium that you applied for originally, or we're going to have to rate that premium, which means adding an additional premium for the risk that is necessary.
Hmm. We have a question here that we're seeing on the message board. Why can't my personal doctor do that medical?
Well, in some instances, they can, um, because within recent years, I would say within the last 10 or so years, the insurance industry has widened its net of doctors. Like years ago, 20 years ago, there was one doctor, two doctors that the insurance company will say you have to go see this person. Nowadays, your doctor could very well be on the panel of doctors that the insurance company works with for you to do medicals. And so every now and again, there are doctors who come into the marketplace and they are not within the net of doctors. And so in that situation, then you would have them to be referred to one of the doctors within our net.
Okay. So you have a person essentially coming in, they get their medical, you assess the risk, and with that risk, a premium is assigned based upon that person's risk.
That's correct.
How important is it for a person, and I mean it may sound like a rhetorical question, but how important is it for someone to maintain their premiums? And does all of the benefits that one would attain from the actual health insurance package, are they immediately available to the client?
Okay, so specifically to medical insurance, okay? Uh, from any time that an individual is covered by an insurance company, they should do everything, Dr. G, every single thing to make sure that they never let that insurance company off the hook. Never. And the way you do that is by paying your premium at the stipulated time. So what you've actually done is entered into a contract where you say that I'm going to pay this $200 per month, and the insurance company agrees to handle any medical situations I have, and if there's a medical emergency, sorry, a major medical, you are willing to handle up to a $500,000 in cost for me. And so when we look at the output of $200 to the $500,000, possibly you must never ever let the insurance company off the hook by the forfeiting of the stopping of that premium. You never want to do that. You want to maintain that. Okay.
Right.
Now, when you start a medical program, there are some things or some I would say claims that are immediate, and there are some claims that have a stipulated time period that has to pass before you can claim. So, as an example, most medical plans, if you choose to have it in your program, dental and vision, would stipulate that you can only make a claim to dental and vision after the first 3 months of that plan has passed. So while you may be immediately able to go to the doctor and have a physical checkup and to pay your deductible and to get a refund because you want to do preventative maintenance, if you're getting into uh, dental and vision, then there's a waiting period of 3 to 6 months.
Okay.
And
Another
that
question.
generally
Go ahead.
is the only condition, apart from pregnancy as well, that would have a waiting period.
Pregnancy as well, because that has a, okay. All right, good. So how long is generally that waiting period? And is it
For pregnancy.
the same thing across the board, or is it dependent upon the insurance policy that one gets?
You're talking specifically for pregnancy?
Yes, pregnancy, the dental, and the vision. Those things are standardized across the board, across all insurance companies,
Yeah,
or
from my knowledge of varying insurance companies, I've found that the standard time for dental and vision has been 3 months, and it varies from company to company with pregnancy between 3 to 6 months.
right.
But the dental and vision is generally standard 3 months.
Okay. Now we have another question. What happens if I miss a payment?
Okay, so years ago, um, you had what would be considered a 30-day grace period. You pay your premium on the 20th of January, your premium has to be paid by the 28th of February. And if you miss that payment, it means that your coverage has stopped. Your coverage has ceased, which in essence suggests that if you were to go and make a claim, you're going to be unable to make your claim. What insurance companies have done, because that kind of seemed um, challenging for someone to simply miss a premium and they don't have the coverage, is that they offered an additional grace period. So, in addition to the 30 days that you're supposed to pay your premium, a grace period of 30 days is added to that, which kind of suggests that you have 60 days in which to make your premium. No, if that 60 days is passed and you don't pay your premium, you're uncovered. And that's challenging because you're allowing the insurance company off the hook. And that's not what you want, right? You want the insurance company to be on the hook to cover that $500,000 cost, $30,000 cost that you're unable to handle. And so you want to make sure that you pay those premiums.
Right. Now, I saw a caller just now attempting to call in. I think it was, I believe it was Mappus. Do you wish to try to call in again at this point in time, or your question was answered? Okay, I think he probably had his question answered. So
Okay.
I wanted to go on to ask in terms of your coverage.
Mhm.
Will that coverage also provide you with coverage for things like very critical illness? We sometimes, and in more recent times, certainly, we have heard about critical illness coverage versus your standard medical coverage. What is the difference?
Okay, so critical illness is a specified type of insurance coverage because it speaks directly to the 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 covering of a certain amount of critical illness, which differs from company to company. So one company may say it is 25 illnesses, while the other company may say it is 22. But they're all major critical illnesses. For example, Alzheimer's, uh, meningitis, blindness, cancer, coma, stroke, heart disease, heart attack, right? And so most of those serious illnesses is what would be considered critical illness. No, your normal medical plan, what it does, remember, is that it replaces what you have paid for the services that you would have been provided for from a medical practitioner. But what it does not do is to replace an income for you, or to give you a lump sum payout based on the fact that you are now having a critical illness and will need additional income because your income could have been affected to make sure that you can still live, pay your expenses, and try to make sure that you can even get over the particular critical illness. So there are two separate instruments used: the medical plan and the critical illness plan. But the critical illness plan differs from company to company.
Okay. We have
Does that
another
help?
question here coming in. Why do I have to repeat a medical examination again if my policy has lapsed?
Okay, so it is that's not always the case. A person who's asked to repeat a medical, there are few occasions that may happen. One, if they, because their coverage was at a certain level that required them to do medicals in the first place, those medicals will be required in the same day. So if you were to do a medical, an HIV, and and a few other tests to get the insurance coverage, and it was lapsed, the insurance company is going to require that you do those same medicals again to make sure that you are in the same position that you were when the insurance company took on the risk. But there are times when a medical is not necessary. If you did not have a medical to get the insurance, when your policy has lapsed, you the agent will come to you and they'll probably ask you a few medical questions, and if they're favorable, then there's no medical. No. If when that happened, your medical condition changed. So prior to having the insurance, you're in tip top shape, perfect health. But then the policy lapsed, and you were asked a few questions on the medical questionnaire. And let's say, for example, you had a back injury. Then the insurance company is going to say, you know what, let's get this back check out to see what's the prognosis of it, if this is going to be long lasting, so that the insurance company can then make an assessment of if the risk has changed, or if they would put it back on the books with an additional premium, or if, on the extreme case, they have to decline the reinstatement of the policy
Hmm. And based upon those new additional risks.
based upon those new additional risks.
Hmm.
So
So,
in essence, the company is reevaluating the risk based on new information that came into the organization.
right. Okay. Why is it that um, chemistry, what we would call chemistry in medicine, so kidney function, liver function, even some hematology, like your full blood count, is taken off. So you want to see if the person's anemic, try to see what their kidney functions, like their liver function, their cholesterol function is done. And then for other persons applying for health coverage, they may have to do serological tests, HIV tests, hepatitis B and hepatitis C. They may even have to do toxicology screens like cocaine, heroin, stuff like that. Why the differences in tests assigned?
Interesting question. Uh, and it primarily speaks to what I would say morbidity and mortality. Um, there are two terms that sometimes are confused, but morbidity speaks or refers to disease states, while mortality refers to death. And so a person who is applying for medical insurance is on the morbidity side. And a
Right.
person who's applying for life insurance is on the mortality side. It's more about when will you die, at what age will you die, trying to predict that, right? Morbidity and health insurance speaks about disease. And so the associated medicals that would happen with medical insurance would be selected because of that very same reason. Um, Disease states, want to see what illness this person may have or may not have. That can affect their quality of life. It may not cause them to pass away in the short term, but it could affect their quality of life. And if it affects their quality of life, remember the medical, as it relates to medical insurance, the company is going to be at risk to pay out large sums of money, even though the person is alive. And so that's why there may be differences in medicals.
Okay. So we have spoken about our various definitions, our deductibles, our premiums, our co-pays, the difference between even critical illness and normal medical coverage. Is there an should a person, for instance, have each person within the household on a separate health insurance plan, or can you have a group health insurance plan? And which one is recommended and why?
Okay, so in a family, insurance companies allow you to have a medical plan where one of the adults, it doesn't matter, is the carrier of the plan. And so they're the main person who the insurance is catered for. And then their spouse as a spouse, and then their dependents can be added. And so you can have a family program. Right
Right.
now, this family program does not go outside of the immediate family. So this has nothing to do with uncle, sister, brother, mother. This speaks to husband and wife, or spouse and spouse, and children. So it could be any amount of children, right? But it can only be one spouse, right?
I have also heard of plans for instance, that I know in the US you can have things like a surgical cash benefit plan, where that would be specific to some person, for instance, who may need to have a large outlay of cash in the event of major surgery, or even specifically a plan for senior citizens. I know here on the island, we certainly have a large group plan, like for instance, the BARP group plan. Is Are those beneficial for persons, especially within those categories, and how do they really work?
Okay, so in Barbados, you know you did mention that in the U.S. there's like a surgical benefit
Right.
plan, and there is such in Barbados as
Oh,
well.
really? Okay.
Yeah, I don't want to be creating an advertisement here on your show, but just suffice it to say that there is such a program in Barbados. Okay,
Right.
uh, it is hugely beneficial for a person because cash. Remember, the insurance company is there to provide cash when it's needed most, when you are not in a position to be able to afford it. And so, a surgical benefit plan, a surgical cash benefit plan, as we call it, is absolutely necessary. So, well, again, your basic medical plan may refund you what you paid, right? The surgical benefit plan also added to that can enhance your program. As relates to senior citizens, it is absolutely necessary, Dr. G, because I mean, we would understand that our health, in a general sense, deteriorates as we get older. Yes, there are those among us who their health seems to be getting better as they get older because they actually do extreme preventative care and make sure that they're in tip top shape. But
Right.
generally, our health is older. And so when that happens, our medical costs can skyrocket. And so if you are at the most vulnerable state, which I would suggest is at your golden years. And we can label that, let's say 60, 70, 50 to 70, whatever is your golden years. If you are at that vulnerable state, um, but heightened risk, you want to make sure that you are covered. You want to make sure you're in a position that if there's a big one, right, that the insurance company holds it and not you or your family. So it
Right.
makes a lot of
We have another question here coming in. Why should one have to pay for blood tests based upon their family's history when they are applying for their health insurance? Shouldn't the test be determined by the diseases that that person has actually been diagnosed with?
mm, good question. Good question. Could seem unfair. Could seem unfair. Um, Hereditary is that's a that's an interesting uh, component within, especially in medical insurance. Um, Generally because your mother, your father, you have been a diabetic and you had the same habits, and then you could be predisposed to such,
Right.
right? And so that's where the challenge comes. However, the payment is a bit challenging. I would still think, though, Dr. G, that the insurance company uh, sending you for these medicals, if you're a first time um, person to the insurance company, I think the insurance company underwrites the cost of those medicals. So yes, they may ask for them, but the cost would not be at you. Now,
Right.
I would also say though that if the questions you answered, even though you may say your mom or dad um, had a particular illness and you may be predisposed to them, if your particular situation, based on your responses, suggests that you're in good health, you're not going to be asked to do a medical.
Right.
That happens on the occasion where you suggest something that could cause them to feel that you may be predisposed to such.
Understood. I wanted to switch gears a bit. I know that sometimes persons may have conditions that they may find it difficult for them to get coverage. Um, I have heard of patients presenting and saying, I don't think my plan covers, for instance, mental health disorders. Is there anything in particular that is not covered under a health insurance plan? And if so, why?
Okay, so to the first query, where someone would suggest that they had difficulty getting coverage, is that the question? That
Correct.
okay, great. So I can see how that can happen. Um, because if what is presented uh, in the company's estimation places them at a higher than usual risk, then I could see the insurance company can decline a particular case, which is tough. That's
Right.
very challenging. I mean, even on the life insurance side, I've seen people who applied for mortgages needed to have coverage to as part of the application and were declined. I was unable to fulfill their dreams, right?
Right.
And so that's kind of tough. I mean, I can appreciate that. But the insurance company at the same time, while it has a kind of a moral obligation, it is a business as well. And so the insurance company will not pick up or accept all the risk that could seem as if it could cause them problems at a later date. No, there's something that adds to that, in that our market is quite small.
Right.
The Barbados and the EC is a very small market. So if you go to places like North America, there are people who would have been declining insurance coverages here that would absolutely get it even at a better rate in the US because the market is huge.
Right.
And so they're able to absorb
That
loads of
particular
losses.
risk. Right.
Yes, yeah, they may be able to absorb it in that way. Okay, so um, I understand clearly that there are people who can find it difficult to get health insurance coverage, and it is sad, but it is a reality.
We have another question here coming in. Don't know if this has is being discussed, but what type of insurance do you recommend in case you become ill and cannot work in your private office?
Yeah, that's a big one, Adana. In that the industry is changing somewhat, and that was not a risk that insurance companies covered before. But you have to make sure that if you are a medical practitioner, and in order to practice, you need your arms, you need to use your arms. And if you find yourself in a position that you're unable to use your arms, you need to have a mechanism through an insurance program that kicks in and pays you an income while you are no longer able to earn your income. And that's what we do. That's those programs are available right now because it's a challenging position for a professional not to be able to do their chosen field, and they don't have the capacity to earn their income. Then what happens to their livelihood? And so the insurance companies have created programs that can solve that issue.
Right. I want to switch gears a bit. We've been dealing with predominantly healthcare, but is there a particular type of insurance for someone who is a provider, not necessarily within the space of medicine, but anyone who really relies on their, for instance, as you said, their hands to provide a service? Is there any insurance that can be taken out or should be taken out for that person to protect their hands? I know, for instance, there are some surgeons that have their hands insured. Is that something that you recommend?
Yeah, I would recommend it. It is just that our economy does not allow our insurance companies to carry that coverage, and that has to be sourced um, outside of the Caribbean.
Right.
But it can be and necessary.
And it is necessary.
It is necessary. If your hands, and I'm just using figures now, okay?
Right.
Let's use a surgeon, and we're not talking about the morality of it now or the saving of the life. But if your hands produce a revenue stream for you of $1 million a year, then you need to make sure that if you're unable to use those hands, that $1 million or close to that $1 million can be recovered.
Right.
And that's why I said we're not talking about the morality of it. We're just talking about it from a business perspective, right? And so you need to have that type of coverage.
I'm seeing another question here. The questions are coming in fast and furious this evening, and I'm liking it. What is the difference between Keyman Insurance and business interruption insurance in protecting the business when you can't work?
Okay, all right, great question. That person has experienced
Yes.
a different level of coverage. So with Keyman Insurance, so let's use an example. So there's a patriarch who set up a business, and there is now a large organization, and the brains behind getting the organization to that stage lies predominantly within that founder. And so he does business on behalf of the organization. And so, like the lenders, the shareholders, the people who have invested in that business, does it primarily because X person runs the business. If that person were to be unable to run the business through death, for example, it means that there could be a reluctance for bankers or creditors to fund the business because they trusted X. They do not trust his ear, or they do not trust the next person you're going to put in there, because they know that every time he said that he will do something or he will make a payment, they could guarantee that it was going to be done. And so because of that, his business need to be protected from his loss or her loss, right?
Right.
So that if he is removed or she is removed from that position, there's a mechanism through an agreement with the insurance company that props the organization up through cash flow until they're able to find a reasonable representative to continue the building of the organization. So,
Okay.
as an example, um, the business turns over $20 million a year, and they stand to lose 50% of that at $10 million, because if this guy is gone, these guys not going to do business with the organization anymore. So he purchases what is called a keyman insurance up to the tune of 50% of that revenue, $10 million, and he passes. The insurance company pays $10 million into the organization to keep them afloat until they find a way to navigate the business now through the turbulent waters.
Right.
It's a very, very needed form of insurance.
I wanted to go on to speak about um, I know that there's a lot of increasing risks now, especially during COVID. Are COVID hospitalizations, are COVID related illnesses, and certainly long term COVID, is that something that has been covered? And I'll go on to then ask my second question, which is about telemed.
Okay, because COVID is just upon us, I can say that the insurance companies are now even trying to grapple with it as well, and this is within our region I'm talking about, right? Because of, as I said, the depth of the marketplace external to our region, they can move a lot faster. But because we are governed by reinsurance treaties, and have to follow what the reinsurance companies suggest, COVID is not something that has been placed on on the radar for for the illnesses that will be covered. I can see though that um, insurance companies would try to make sure that they can become creative enough, because one pandemic can mean that another one can come, right? And so I can see how they would try to innovate to get to that place.
I'm going to follow on with my telemed question. Especially during this COVID pandemic, physicians internationally have taken a stance to start to shift towards telemedicine consultations. is their coverage provided for persons who would have sought medical attention via a telemed consult?
Yeah, not that I'm aware of right now. But again, Dr. G, the insurance companies, as they have done in the past, right? When there were new phenomena that appeared on the scene coming out of tragedies, they adjust, right?
Right.
And in the same way, these guys will be adjusting to shift to that form of doing business. In the same way, how we're even having this call now, which probably would not have been thought about 15 years ago, right?
Right.
Insurance companies also are going to have to adjust, and I believe they will.
I want to take a question here that I'm actually getting from message board. What consideration is given to encouraging group health insurance nationally to lower the current high premiums? Should government offer such insurance to encourage persons to have greater coverage of health care risks?
Dana, can you repeat again? What consideration?
What consideration is given to encouraging group health insurance nationally to lower the current high premiums? Should government offer such insurance to encourage persons to have greater coverage of healthcare risks?
Yeah, I'm all for competition, right? I remember years, well, not years ago, probably 4 years ago, there was some rumblings about the government. Well, at least I heard tinkering with doing such, right? Um, as an insurance company, um, I know that an insurance company would not necessarily want the government to come into its mainstream line of business, right? But the health and care of the nation is everybody's responsibility. And if there's a way that premiums can come down by another player coming in, then I think that forces really, really good competition and would cause the insurance companies as well to have to innovate and become more creative in offering the services.
Okay, good. In terms of uh, coping, certainly not necessarily, for instance, a psychiatric referral, but a psychological referral where the person is going for something like cognitive behavioral therapy or some other psychological assessment and an intervention. Is that something that is covered for someone?
Yeah, I think there's provisions. I know psychiatric for sure.
Right.
Um, I, 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 I would like to be on the side of caution with psychological. I know psychiatric for sure. I do think so, but I would prefer to err on the side of caution with the psychological aspect.
Okay. All right. And certainly, where do you think um, health insurance providers can assist in terms of encouraging their client base to participate in preventative measures to improve their health? Certainly, whether it is eating better, exercising more, are there any mechanisms that maybe nationally uh, we have, if not one company, but probably all of the companies coming together? I don't know how idealistic it may be, but really to encourage a more preventative approach to healthcare.
This is an area, Dr. G, that I believe does not gain enough attention
Yeah.
uh, because it speaks to the company's uh, bottom line. So as an example, while the insurance company takes your risk away, the insurance company does not want to have equity, right? And so the healthier a
I
society,
didn't want to hear. I didn't hear you just now. Does not want to have.
they do not want you to be ill for them to have to pay,
Right.
right? So a healthy society is to the absolute benefit of an insurance company. So this is an area that I think we should delve into more, where programs for preventative care should be launched. Healthy lifestyles. I think years ago, healthy lifestyles came out of one of the insurance companies at the time, and at the time, the insurance company had each month they will go from parish to parish and present a kind of healthy lifestyle, get fit kind of situation. That was very good at the time. And if we can get back to something like that, then apart from the business end of it, our society becomes a healthy society,
Right.
and we save loads of cost to families, right? And so I do agree that that is something that should be done on a national scale as well.
So, Robin, and as we are wrapping up, is there any take home point, or maybe a few take home points that you would like to leave with our listeners this evening, whether they're on the end of providing healthcare or on the patient end, as it relates to health insurance?
Okay, yeah. So we've been talking about particularly in particular health insurance. Okay, and I have seen in my 29 years in the business, um, I've seen where I've had a client who had a stroke, right? And the insurance company had to pay her income for the remainder of her life. She's now deceased, but the dignity that was given back to her when her income was reduced from source, because obviously she didn't have a job anymore, but it
Right.
was replaced because of her income from the insurance company. For over 12 years, I can see how she she has benefited substantially. Now we're sorry for her illness. We do not want her to become ill, but since she came ill, we can see how dignity was retained to that family. Her husband became an advocate for us, right? And wanted to make sure that every single person he met made sure that they at least made the decision one way or not to have insurance, right? Um, I do not like. I've also seen the other side as well, where insurance policies were lapsed, and sometimes because there was no choice, right? But the unfortunate thing that I've seen in my business is when that lapse happened when there is a cause for a claim, but then the claim can't be honored because the policy was lapsed. And so my suggestion always is, please, after the insurance company has agreed to honor their end of the bargain by you paying that premium, sometimes 2% per year, 1% per year. Um, do not let the insurance company off the hook. Don't, right? It can be a matter of quality of life or life and death. I can recall, I had a colleague, well, let me not say that. I know of a person who, through his medical insurance, it was maxed out at $1 million because he wanted to save his life when he was diagnosed with cancer. He eventually died. But there was absolutely no way, Dr. G, that he would have been able to find $1 million for care.
Right.
There's absolutely no way. And so, yes, sometimes it would seem like you're paying this premium all the time, you're not claiming, you're paying this premium, not claiming, but the truth is you don't want to claim. You don't want to be diagnosed with cancer and have to claim, right? But the
Right.
insurance premiums are paid just to make sure that you transfer that risk from you to someone, to an organization who can handle it. That's what I like to say as well.
All right, great. I want to say thank you very, very much for coming this evening and spending some time to really inform us. I know that the space of insurance can be quite ticklish for some and quite an uncomfortable space, fraught with lots of questions and misunderstandings. And I just want to say thank you so much for coming out and really educating our listenership. I also wanted to say thanks to all of our listeners who participated on the message board. We had so many questions this evening, and I want to encourage you to follow us on both Podbean and Anchor. And join us next week on First Aid Chats by Dr. G, Closing the Gap. Next week, we will be having Dr. Clyde Cave, and he will be presenting on autism. Have a good evening, everyone.